All right, so Elizabeth Warren has actually kind of been popping off recently with her critiques of the Federal Reserve's monetary policy of hiking interest rates right now in an effort to address inflation. And I'm putting that in air quotes because the current Fed policy really is not going to do much to address inflation, simply because the Federal Reserve doesn't really have the toolkit to be able to address the main drivers of inflation, which, as we've been discussing throughout the entirety of the pandemic, were mostly due to supply chain breakdowns because we've spent decades in this country hollowing out our manufacturing base, exporting jobs overseas, and so that led to a lot of weak links. But then also on top of that, the straight up price gouging that corporate America has been putting on the backs of average working class families. And so Elizabeth Warren went on CNN to basically do an interview and talk about how ridiculous and insane this current policy is, where you're putting the burden of addressing inflation in a way that is not only not really going to be that effective, but also in a way that completely avoids going after the richest corporations and billionaires in this country and puts it all on the backs of millions of workers who will be negatively impacted by this policy. So let's go ahead and jump into this clip here, and then I will give you a little bit more context after.
Ask more broadly about the economy. The Fed chair, Jerome Powell, signaled this week forceful and rapid action on inflation. It could be coming by keeping interest rates high for some time. Listen to what he said.
While higher interest rates, slower growth, and softer labor market conditions will bring down inflation.
Again, I just gotta say, him saying softer labor market conditions is such an absurd euphemism for what he's actually describing here, but Elizabeth Warren is going to translate that. Basically, softer labor market conditions means that you are disempowering the working class, whether that's in union drives that we've seen as sort of revitalization of the American labor movement. You're hoping to tamp down a lot of that pressure, which has been slightly bringing wages up. And also you're going to be forcing people out of the workplace with essentially mass unemployment because of these rate hikes. So pretty much a crazy euphemism to be using there. Soft labor market conditions. You're talking about forcefully crushing the working class right now.
They will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation.
Is raising interest rates again a mistake? And how likely do you think it is that a recession is coming if the interest rates continue to go up?
I just want to translate what Jerome Powell just said. What he calls some pain means putting people out of work, shutting down small businesses because the cost of money goes up, because the interest rates go up.
So it sounds like you do think it's a mistake to raise interest rates again.
I am very worried about this because the causes of inflation, things like the fact that COVID is still shutting down parts of the economy around the world, that we still have supply chain kinks, that we still have a war going on in Ukraine that drives up the cost of energy, and that we still have these giant corporations that are engaging in price gouging. There is nothing in raising the interest rates, nothing in Jerome Powell's tool bag that deals directly with those. And he has admitted as much in congressional hearings when I've asked him about it. Do you know what's worse than high prices and a strong economy? It's high prices and millions of people out of work. I'm very worried that the Fed is going to tip this economy into recession.
Okay, so listen, first of all, I'm obviously not the biggest fan of Elizabeth Warren. Still kind of have some hard feelings about how she acted in the 2020 primary, in the Democratic primary, where she basically sabotaged Bernie Sanders and stabbed him in the back. So, put all of that aside. When it comes to monetary policy, when it comes to economic issues, she's usually pretty good. And this is an example of, us having to give a little bit of credit here to Elizabeth Warren for being 100% correct about this, right? What she's saying there at the end of it pretty much summarizes the current monetary policy that the United States is using to address inflation, right? And her point there was that it's not even just that the Federal Reserve is deploying a bad policy, but it's that they do not even have the toolkit. They don't even have the ability to deploy the necessary policies to actually get inflation down in a meaningful way, while also potentially avoiding an intentionally caused recession, which is exactly what the Federal Reserve is attempting to do right now. So again, she kind of translated it there at the end where she's saying, when he talks about softer labor market conditions, when he talks about how this is going to cause significant pain to some American households and businesses, what he's talking about is mass layoffs. He's talking about the fact that, you're going to be increasing these interest rates, which is going to cause significantly less investment. And who are going to be the first people who are affected by that, cutbacks at a lot of these corporations? It's going to be the workers. It's going to be the people at the bottom of the rung. And so, of course, inflation is a bad thing that is obviously affecting millions and millions of people and effectively destroying even the marginal wage growth that we have seen recently. Of course, that's bad, and everybody wants you to address inflation. But what's worse than just having these inflationary pressures is having those inflationary pressures and having a gigantic economic collapse into a recession, where now you're going to have not only people not able to afford like the basic life necessities like food or rent, etc., but now you're also going to have millions of more people out of work, which is just a worse situation. And again, doesn't actually get to the core root of the problem with why we have been seeing inflation take place in the first place, right? Again, supply chain breakdowns. What could you do about that? You could significantly invest much more than we already currently are, even with the marginal successes of the Biden administration on things like the CHIPS bill. You could invest significantly more in domestic manufacturing. That's one way that you could shore up our broken and dysfunctional supply chains. Another thing that you could do is go after a lot of these corporations who are right now making record profits right now, okay, especially in the oil industry, in the food industry. All of these corporations are seeing record profits. They have been throughout the entirety of the pandemic. So you could go after those corporations. You could install, like price caps on some goods. You could, for example, nationalize our energy system so that it's not driven by a profit incentive, but is instead driven by what is best for the American people. There are so many different things, even smaller policies like that. If you don't want to go as far as nationalizing the energy system or price caps or something, so many other policies to just address the fact that corporations are fleecing the American people and do something about that. But instead, we don't have a Congress that is functional enough or, that is not corrupted to be able to actually go after those corporations in a meaningful capacity and give material support to working class people in the process. And instead, we're just getting this disastrous Fed policy, which is not actually going to meaningfully address inflation. And that's not just my opinion. That's not even just Elizabeth Warren's opinion. That's the opinion of Jerome Powell himself, who, as she was saying in that clip, has openly admitted in a lot of these congressional hearings that his policy is really not going to do much to tamp down gas prices or to tamp down food prices or any of the basic staples in terms of getting those inflationary pressures down in a meaningful way. So she's 100% right on that front. But now I want to get into this article that was written by Ken Klippenstein, who gives us a little bit more of a sort of historical perspective and insight into what the Fed's own reports are saying in terms of whether or not this is going to cause a recession. Because again, Jerome Powell is saying there's going to be some pain, we're going to soften the labor markets, but there's not going to be a wide-scale recession. Well, the Fed's own policy reports disagree with him. So here from Ken Klippenstein, he says, Fed's own economist warns of severe recession from Chair Powell's rate hike. So, rate hikes, what are they saying here? They say, on Thursday, following reports that the Federal Reserve would likely soon jack up the federal interest rate gain again, this time by 0.75 percentage points, Chair Jerome Powell tried to allay fears that the Fed's strategy would cause an economic downturn, insisting that another rate hike was unlikely to cause a deep recession. He says the interest rate hikes, which nominally serve as a way for the Federal Reserve to tamp down inflation, and listen, maybe it will have some reduction in inflationary pressures within the economy, but again, you're choosing to pull money out of the economy in ways that are going to disastrously affect disproportionately the people on the bottom rung of this country, okay? The people on the bottom rung of the socio-economic political ladder in this country, instead of going where the vast majority of wealth in this country exists, at the top 1% in the billionaire class in corporate America. Okay, keep in mind, we are currently sitting in a situation right now where we have worse wealth inequality than the fucking Gilded Age, where we had robber barons who were, heavily exploiting their workers even more so than they are right now and running out the back door with billions and billions of dollars. We have worse wealth inequality than pre-revolution France. Okay, so we have a handful of families, 3 or 4 families in this country that have more wealth than the bottom half of Americans. Okay, we have disastrous wealth inequality, but they're choosing to absorb or choosing to put the burden of addressing inflation on the backs of the people who have the least amount of wealth in this country. Okay, so they continue saying that They are also a way to put economic power back in the hands of the very rich by driving up unemployment, since higher interest rates make it more expensive for banks to loan people money, leading to scarcer investment and therefore fewer jobs. And they say that Powell downplayed the effect of the Federal Reserve's moves were likely to have on working people. He said, "We think we can avoid the very high social costs that Paul Volcker and the Fed had to bring into play to get inflation back down," Powell said, referring to the period in the 1980s when the Fed similarly hiked interest rates and engineered a recession. And they say that the Fed's own research suggests otherwise. Powell's remarks reflect an attitude common among financial elites that the Fed can execute a soft landing in which enough pain can be inflicted on the economy to reduce inflation, but not so much that the economy slides into a recession. But an extraordinary yet little noticed Federal Reserve study undercuts the exact case that Powell is trying to make, published while he was making it. And they say that the study warns that the Fed's aggressive interest rate hikes this year echo a strategy that it undertook a century ago that led to a depression because the Fed did not account for how quickly unemployment can spike in response to rate hikes. And they got a quote here from the report saying that strong or tight labor markets can become weak or slack faster than policymakers may anticipate. Indeed, our results demonstrate that labor demand reacted sharply and quickly to the tightening of monetary policy at a speed which can outpace policymakers' ability to track current economic conditions. So we could be ending up in a situation where this just starts to spiral out of control, and then it's just this massive downward spiral at light speed, and lawmakers don't even have a capacity to respond to it quick enough because of this sort of catch-up effect to how quickly this stuff can end up spiraling. Even though we're not necessarily feeling a lot of the effects of these rate hikes right now, we're definitely going to be feeling them in the next months and coming years. But they say that the US had just come out of a pandemic, the Spanish flu, similar to how we're coming out of COVID right now, that killed 657,000 Americans. I don't even know what we're sitting at right now with COVID, at least over 1 million, maybe getting up there close to 1.5 million. But they say that since many of those who died were workers, this meant that there were more job openings than workers to fill them, granting the surviving workers more bargaining power. And this is kind of an interesting point that I don't think a lot of people brought up when we were talking about the labor shortage, right? There was all these arguments coming from the left, which I think are accurate, about how there's not really a labor shortage. There's a shortage of, improved wages or working conditions that these companies could be offering people to incentivize them to actually want to go work those jobs. Those are fair points, but another point here is that we have had so many people, more than any other country on the face of the planet, die from COVID disproportionately. A lot of those are going to be poorer people. They are going to be working class people. And so straight up, one of the main factors, or a significant factor in the labor shortage that we were seeing, could have just been that a lot of workers just straight up fucking died from COVID, right? They were on the front lines doing the toughest jobs, being the people who were most exposed, and got the least help during COVID as well. So they continue saying that a tight labor market naturally led to high employment and rising real wages, the study notes. Though the study doesn't mention it, labor strikes were also proliferating, spurred by the low unemployment rate, which is also kind of what we're seeing right now with this revitalization of the American labor movement, with all of these union drives that we've been seeing at corporations like Amazon and Starbucks and Chipotle recently, and all these other ones as well. But now we get into this previous statement from Jerome Powell, which Elizabeth Warren was alluding to in that statement there, where he's just straight up admitted what the goal of the monetary policy of the Federal Reserve actually is right now. It is to basically, again, crush the working class. So they say that Powell had been plenty candid about his intentions, declaring his desire to get wages down. Again, they're just openly fucking saying this, and to get inflation down. So notice how he phrases that, right? First, it's to get wages down, then to get inflation down. So not to, reduce the profits of a lot of these corporations who are seeing record profits right now, billions of dollars in profits. They're buying stock, they're participating in stock buybacks to enrich their wealthy shareholders, all of those things where the disproportionate amount of money actually exists in this economy. But no, the goal is to get wages down, okay? And who earns wages? It's not the billionaire class. It's not motherfuckers sitting on Wall Street. It is working class people. It is the people at the bottom rung of our economic ladder here. But they say, as Powell sees it, worker pay is too high apparently right now for Jerome Powell over here. They say wages are running high, the highest they've run in quite some time, Powell said. Okay, keep in mind, wages are running high. We have seen, if you account for inflation, we've seen stagnant wages relative to productivity increases from the working class for like 4 decades running, since at least the 1980s, maybe even stretching back to the 1970s, okay, in the era of trickle-down economics under Ronald Reagan, tax cuts for the rich and deregulation and the busting of unions in this country. We have seen stagnant wages for decades. So like the idea that you are now going to look back at a situation over the last couple of years where we've seen the slightest uptick in wages, it's completely fucking ridiculous. We've had decades of wage stagnation, and then the second that we get a little bit of an uptick in that, Jerome Powell is turning around and he's saying, no, you know what, I think it's time to put another crush on the working class here. But he said, and they are one good example of, or good illustration really, of how tight the labor market really is. The fact that wages are running at the highest level in many decades. They say anxiety among financial elites about the tight labor market, i.e. workers having some relative leverage, has scarcely been concealed. Also on Thursday, Larry Summers, this absolute ghoul who has been wrong about every single economic prediction he's ever made, a top economist in both the Obama and Clinton administrations, said that tackling inflation will likely require a significant recession. Okay, keep in mind, this is the same motherfucker Larry Summers who under Obama was advising him after the 2008 financial crash to not dare to go above a $1 trillion investment in helping average working class people. And because Obama didn't make that adequate investment at the time, and because he chose to bail out the banks and not give adequate relief to average working class people in this country, we had an extended recession that took years to make up those jobs back, and also resulted in literally trillions of dollars in potential losses for the overall economy because they didn't do enough deficit spending at the time. So that's exactly who Larry Summers is. Obviously not the type of person you want to be listening to in a moment like this, but they say in recent months, Summers has also called for a 10% unemployment rate. 10%, a figure that would mean putting millions of Americans out of work. And they say in a corporate earnings call last month, the CEO of a multi-billion-dollar real estate company, Douglas Emmerich, remarked that a recession could be good for the commercial real estate business if it comes with a level of unemployment that puts employers back in the driver's seat. As The Intercept reported, and their recessions can be bad for business in many ways, they're great for crushing growing labor power. And that's exactly what this is about. Okay, again, we've seen this many different times. I think this was the article that he was referencing there, Bank of America memo revealed. This might actually be a different one, so we've had multiple of these come out. Bank of America memo revealed, we hope conditions for American workers will get worse. So, I mean, listen, at the end of the day, corporate America, the billionaire class, the capitalist class in this country, is getting exactly what they wanted out of this pandemic. This is a perfect example of disaster capitalism. This is an example of them using a crisis to further perpetuate their own power, further entrench their own wealth in this country. We've seen that, right? We've seen that with the bailouts at the beginning of COVID, where average working class people get measly $1,600, $1,400 checks from the Biden administration. You get the child tax credit, then that gets thrown out the window by Joe Manchin. You get slight increases in unemployment benefits temporarily. You get a little bit of crumbs for the American people, which, don't get me wrong, helped millions and millions of people prop themselves up temporarily. Now you have a situation where you have this slightly tightened labor market. You have a slight revitalization of the American labor movement with all of these union drives, workers starting to get just a fraction of leverage back when they have not had any leverage in this economy for decades, or maybe even for the entirety of its existence, depending on how you want to define it. And now we're sitting in a situation where we have inflationary pressures that are largely being driven by the fact that, number one, we have had a government that has been dictated by corporate America's interest and allowed a lot of these corporations to ship millions of domestic manufacturing jobs overseas to places like China, Southeast Asia, the rest of the world, in order to exploit cheap labor. Thank you, capitalism. And then the second biggest driver of inflation has again been just corporate price gouging, which, according to some estimates that we've covered on this channel, could account for a straight up majority of the inflationary pressures that we have been seeing in the main sectors within the American economy. So you have two different main drivers of inflation here: supply chain breakdowns and corporate price gouging, which are being driven by the capitalist class, being driven by corporate America, the wealthiest billionaires and millionaires in this country. And then the solution to that now is not to invest dramatically more in domestic manufacturing. It's not to go after the big corporations who are price gouging the American people. It is instead to just basically, from the perspective of Biden, just sit back and allow the Federal Reserve, with with no critique whatsoever coming from the Biden administration or anybody around him, to just sit back and allow the Federal Reserve to plunge us into a recession and to put the burden of addressing inflation in ways that aren't even arguably going to be that effective in reducing inflation, but put the burden of addressing inflation, which is being driven by the billionaire class, on the backs of the workers. So it's just a completely insane situation. This monetary policy makes absolutely no fucking sense whatsoever, unless you just happen to be a wealthy capitalist in this country and you want to reduce labor power, you want to reduce the power, the slight bit of leverage that workers have managed to garner over the last couple of years and over the last couple of months even. So, I mean, this is what we got right now. This is the United States of America, okay? We have a government that is completely beholden to the capitalist class. We have a Federal Reserve which pretends to be independent, but, you know, miraculously all of the policies that they deploy also just so happen to benefit the status quo and to benefit the wealthiest corporations and billionaires in this country. And average workers are basically just left to either die or to get completely fleeced by this system and shoved out of work because they don't want to go after the profits of a lot of these wealthy corporations and billionaires.